Good morning, I'm Dean Heskin, President and CEO of Swiss American Trading Corporation. Thank you for tuning into our podcast where we take a hard look at some of the hard facts of today's economy, today's financial markets, which have been, I think we could put it mildly, say they've been a bit bumpy here over the last several months, if not a couple of years. I have Chris Agelastos. He's with us today. He's a frequent co-host who's going to talk to us a little bit about what some of these bumps are all about and what it all means. Good morning, Chris.
Good morning. Good to see you.
Nice to see you as well. And there's been a few bumps in the economy. I'm not going to lie. We've seen definitely some changes that have been developing and taking place. What I mean by that is the alliance of BRICS, which is some might say, well, that's not necessarily a problem in our economy. Well, number one, it may create a problem, probably will create a problem in our economy in terms of people abandoning the U.S. dollar. And that's the whole problem is that it is the problem because that the dollar is quickly losing favor, which is going to create or has even started to create a little bit of a domino effect out there. Mm-hmm. But no matter where you look, pricing, inflation, we've talked before just recently in a podcast about, interest rates and housing costs. There just seems to be trouble at every turn. And this recent news, or the first thing we'll take a look at here, is how layoffs have been announced at multiple companies this summer. And we've seen it with several different companies out there: Intel, Cisco, the Paramount, the motion picture company. Mm-hmm. It's not just isolated to one or two industries, as I mentioned. It's all across the board. Yeah. And when you're talking layoffs, you can't have layoffs take place like they are and in the same breath suggest that we have a healthy economy. But yet the talking heads on Wall Street would all suggest that we do have a healthy economy, that things are on the uptick or the upswing. And there's this job market that we're looking at right now. It's not as though, okay, there's these summer layoffs and it's over. I believe this could be just literally the beginning of, yet more of this to come. What do you think about that?
Yeah, like you said, it's multiple industries, right? So it's not just a certain industry struggling maybe because of AI, or retail. We were talking about a while ago, retail struggling because nobody wants to go out to the mall. They can all order online. This is tech, media, auto. Stellantis, right? They own Chrysler Group. They're gonna, I think, produce about half as many Dodge Ram pickups, which are one of their big products. Sonos, the portable speaker giant, and they're all talking. The numbers that they're mentioning in here so far are 7 to 15% of their workforce, which percentage-wise doesn't sound big, but if you think about standing around with 9 of your coworkers, 1 or 2 of you are not going to be here next month, and that's a big change, and that's a lot of families that are going to be affected. And we've kind of seen this coming. We've all been feeling inflation, right? Well, that hits companies too. They're complaining here that their margins are low. Costs are too high. A big portion of that they can somewhat control is labor. So they're going to do what's in the best interest of the company. And unfortunately for a lot of people, that's layoffs. And what's going to happen from there, right? If people are losing their job, you're going to see a lot of defaults on debt. We're already in a market where people are struggling to be able to pay for their rent and their groceries. Guess what? Their credit cards are probably not going to get paid. They maybe stop making payments on their cars, or maybe shift the limited revenue that they have over to one car and let another one go. So these are all things that we saw in 2007, 8, 9, right? So now obviously we hope it doesn't get that bad, but this really is sort of ramping up to a big financial crisis. And of course, like we've mentioned before, they don't want to necessarily talk about this, especially in an election year. President Trump is a little bit more open to talking about it because it's happening on Biden's watch. But you're right. If you watch the mainstream media, they they don't want us to see how bad I think things really are financially in this country.
Sure. Well, and what you just touched on, the fact that already for a while now in this country, there's been multiple reports about how car loans were already, at getting
Mm-hmm.
to record default rates.
That's right.
People were already having to utilize their credit cards in order just to put groceries or food on the table. How
Mm-hmm.
people have had to go into their retirement account to cover their, just their needs and necessities in terms of living. So
Right.
that's already been happening. And then now again, you start throwing, another undercut of 15% less people employed out there by some of the biggest corporations in the country.
Mm-hmm.
That is certainly not going to, help strengthen the economy by any means.
No.
And so you mentioned the 07, 08, 09.
Yeah.
What we saw in our economy back then, which is a great intro to our next article, because the Oracle of Omaha, Warren Buffett,
Mm-hmm.
he is signaling that there's going to be a 2008 sized collapse. And they don't call him the Oracle for nothing. He tends
That's right.
to get these things right.
Mm-hmm.
And the thing about it is, there's always somebody who's making some kind of prediction, some kind of a forecast as to what's going to happen in the economy. Things are going to go up, things are going to go down, etc. Warren Buffett, he's been more right than wrong. We can just say that by strict math. But that being said, as you go through and you start looking at the breakdown as to why he's saying this is going to happen, it almost becomes like that proverbial handwriting on the wall, if you will. Like
Mm-hmm.
I took a look at this, I read this, and I'm listening to Warren Buffett. It's like, okay, well, this isn't maybe going to happen. This is going to happen, and
Yeah.
I don't see how he's wrong. Do you?
No, I mean he's banking on it, and like you said, if he makes moves like this, there's a reason for it. One of the things that they were talking about in here is how he sold off a good chunk of his Apple stock that he bought in the last several years when prices were a bit overvalued and still are. But he held on to big portions of it that he picked up, I think, around 2016, where he bought in at a good price. So it's not like he's saying, Apple isn't going to be here tomorrow, but he's, getting rid of some of the higher valued stocks and getting those out of his portfolio and moving to cash. And he's currently sitting on the biggest cash pile that he's ever had. And when they talk about this, to kind of put it in perspective for people, they mention here that he has enough cash that he could buy Toyota, General Motors, and Ford and take them all private and just own them outright. That's a lot of money, or he could go pick up a huge portion of a company like Boeing and maybe finance the rest. And we all know, Boeing's been struggling the last year or so with a lot of the news that's been coming out of that organization. So he's preparing. He sees something. He sees trouble brewing. He's getting into a cash position. If you remember in 07, 08, he was, the guy who stepped in to bail out B of A and Goldman Sachs when they had nobody else to really help them. And that was a big move for him. And he made a lot of money doing that. And so everybody is sort of predicting here that he's doing the same thing. He sees something coming. He's shoring up his reserves so that after the big drop, whatever and whenever that is, he's in a position where he can kind of swoop in and make a big profit for him and his investors again.
Sure. Well, and I think what's important to really lay out there for people to understand, ourselves included, is it's not as though he's taking a doom and gloom look to this. He's just looking at this as business, as a matter of math. He's not saying that the sky is falling. He's just saying this market is in trouble and it's going to have this pullback, and he's just positioning for it. He's preparing for it, and he has been for a while. He's just yet one of many billionaires or very well-established investors over the last several months who've come out saying the same thing. and they're putting their money where their mouth is, which that money just being cash. They're sitting in cash positions in the anticipation of this change, this shift that, is coming along. So that's where the key is diversification. Keep yourself balanced, and, I guess in today's day and age, Chris, you just got to keep your head on a swivel to some extent. So
that's for sure.
And investing. So anyway, well, thank you for that. And for those of you who'd like to learn more about, better ways of diversifying or different ways to diversify, and you haven't contacted our offices, please do so at 1-800-289-2646. You'll see our number in the link there as well. Or you can visit us online at www.swissamerica.com. And if you haven't subscribed to this podcast, please do so, as we will bring you more information like this in the future. Thank you so much for tuning in, and have a great rest of your day.
Thanks a lot. Take care.